screen?
I can. But
Yeah, okay.
I see the screen.
Yeah, it will take some time maybe. Now is it clear?
Yes, it's clear now.
Okay,
I
great.
can.
Yeah, so I was saying, like, yeah, initially you will measure the asset at historical cost, that is the cost at which you bought. Subsequently, that is the next year, you can either measure your asset at historical cost or or at a revalued amount or revalued value. What is the meaning of this revalued value? See, suppose you bought an asset for 100,000 dollars, and like definitely asset depreciates. Okay, the property, plant, and equipment. In this, property is the land, plant is the machine. Property can be building or land, any element. Okay, so its value, see, land appreciates, but other kind of assets they decrease, they depreciate. But due to some very high demand in that area, people are ready to pay you a very high amount for your property. Let's say they are ready to pay you $500,000. So isn't it a appreciation in the value of your asset? Yes. So the revaluation, when you have done the revaluation of your property, what you came to know is people are ready to pay $400,000 extra to you for your property. So is that a revaluation surplus or revaluation gain? Yes, it's a revaluation gain. And see, asset which you have bought for $100,000, and people who are ready to pay you additional amount for that asset, now that asset value is like $500,000. So what would be like more realistic, like to show the asset in balance sheet or the statement of financial position? It would be very realistic to show the asset at this value. Why? Because this is the value which you can get immediately. If you still show this value, it doesn't give a clear picture about your assets value. Okay, because every investor or any outsider can say the asset which is of this much value right now in the market, you are still showing that at this value. Okay, so you, but again, I am very clear, the international accounting standards is not like forcing you to use the revaluation model to measure the asset. You can measure the asset either at historical cost, that means the cost at which you bought the asset or purchased the asset, or you can revalue the asset and see what is the current value of that asset, and you can show at that value even. Okay, but either of the one you have to choose. Revaluation model. So if you are showing the asset at historical cost, you have to show that as $100,000 in your statement of financial position. If you are using revaluation model, you have to show the asset at $500,000 in your balance sheet or statement of financial position. Okay. So further details about this I'll be giving you in the next session. I like, this is not the class to discuss about that. And then comes the disclosure requirements. So recognition criteria we have discussed, measurement basis we have discussed. Disclosure requirement is nothing but what we have discussed when
Sir,
we started this topic. Yeah, hello.
sir, if
Yes,
you don't
Abhishek.
mind, can you repeat it again, sir? I've got a call from my job.
No worries. You can please again watch the video. If you've got any queries, you can ask me, because it was a very lengthy discussion, Abhishek. Again, repeating that, like,
Okay.
it's almost 10:30 and I'm drained now. I don't have energy. You go through that. If you
Okay.
don't get, I will again repeat the same thing tomorrow in the class. I really promise. Okay.
Okay, sir.
Yeah, because we again repeat in the sense, like almost 1 hour. I'm tired already with this
Okay, sir.
session. Yeah, so you watch it again. I'm giving you a assurance that you'll be getting that, or else I'll repeat the topic again.
Okay,
Now,
sir.
yeah, don't be upset there. I'll
Yeah.
definitely do that. Okay.
Okay, sir.
Now, so yeah, thanks, dear. So now we were discussing the notes to financial statements. So recognition criteria we have discussed. how you can recognize something as an asset. Definitely, if you want to recognize something as an asset, it should satisfy with the definition of an asset, which in the previous session yesterday we have discussed. Then how to measure the asset we have discussed right now, either at historical cost or revalued amount. Third is disclosure requirement. Additional information about the asset, you have to show that in the footnotes, okay, which we have already discussed right now. Fine. So in that way, these are all the types of assets you are seeing: property, plant and equipment. International Accounting Standard 16 deals with that. International Accounting Standard 40 deals with investment property. International Accounting Standard 38 deals with intangible assets. See, need not worry, you don't remember all this standard numbers. Not required, I'm just writing. IAS 41 deals with biological assets. IAS 2, International Accounting Standard 2, deals with inventories. IAS 7 deals with cash and cash flow statements. IFRS 9 deals with like financial assets. Okay, so we will be discussing all this. Fine, don't worry, in the coming sessions. So today we have done till here. Now tomorrow, like we would be starting from here. Okay, so tomorrow I would be finishing this particular introduction part, and then we'll be solving one full question of financial statement collectively, like in the day after tomorrow's session. The question is this: I'll be explaining you every part of that. Okay, this one, Wilson Company. So this we will be discussing in the day after tomorrow's class. More 2 sessions or 2 classes. This particular chapter is done. Okay. So thank you so much. See you tomorrow.
Thank you, sir.
Your voice
Bye-bye.
is not clear for me. Please.
Sorry. Hello.